What's up guys, Ben here and welcome to Motivation to Invest. Breaking news, the pharmaceuticals giant Pfizer, working with BioNTech, has just released an analysis for their V-shot. It's been proved to be 90% effective against the global issue. Now that means today is an historic day and the market has been euphoric. However, we've also seen many of the stay-at-home tech stocks such as Zoom and Amazon take a major plunge. Zoom, the video conferencing service, which has been widely adopted by companies and individuals alike, their stock took a major hammering. So as you can see here, diving into the share price, Zoom stock is down by around 15% due to this news being announced. The real question is, should you be buying these stocks on the dip? And if so, what is the best way to find a good buy point? Well, in this video, you're going to find out, as I'm not just going to look at the tech stocks which have sold off, I'm also going to look at the stocks which have increased in value, because this is a great opportunity for me to reveal to you guys just how the market works in real time. So wealth is neither created nor destroyed. It is just transferred from one place to another, a little bit like energy. So if these tech stocks are selling off, so where has this cash gone? Where has this wealth gone that was in these stay-at-home tech stocks? Well, I'm going to show you guys. So it's actually been transferred from the tech stocks, from the stay-at-home stocks, from the Zooms, the Pelotons, the Amazon, and it's been transferred and diverted to the hotels, the travel, and the oil stocks. So a lot of people are now seeing light at the end of the tunnel just from this news, and they're thinking, wow, let's get into those cyclical stocks, let's get into those travel stocks. This could be the light at the end of the tunnel, this could be everything being reopened. I'm not going to follow the crowd like everybody else. I'm going to look at this situation rationally, and I suggest you guys do the same. A good tip to see is that the market always overreacts, whether on good news or bad news. So as investors, our job is to take advantage either way. But let's dive into the share price for a few of these particular stocks which have skyrocketed in price. So firstly, of course, Pfizer, the company which has released the V-shot details. So that stock has skyrocketed by around 8.5%. It will most likely be much more by the time this video is released. Then we have Marriott Hotels. That's up by around 14%. So as the news was released, that stock flew up by around 14%. Shell, I did a video about Shell a while back. Oil stock, cyclical. Shell stock is up by around 12.5%, which is fantastic. So that is where all this wealth has gone to. It's gone to these stocks. But has it gone there at the right time? Now, the only person who can answer that is you, because that's down to your own personal opinion. Do you believe that this V-shot means that this is all over and it's all going to be rolled out at speed and that's it? Or do you believe that this is good news, but it's not incredible? I personally am in the latter camp, because I'm in England right now and we're in full lockdown, as is Italy, as is Germany, and many other countries across the world.
The Pfizer-BioNTech vaccine has been tested on over 40,000 volunteers, and interim results suggest it is proving 90% effective at protecting people, but we haven't yet seen the full safety data, and these findings also need to be peer reviewed. So we've cleared one significant hurdle, but there are several more to go before we know the vaccine can be used.
Now, there is no national lockdown yet in the US, and I feel it will happen there very soon on a state-by-state basis. So a lot of this euphoria does come from the US, because they've not had the second lockdown yet. But when the scientists get in Joe Biden's ear and they say to him, Joe, we need to lock the country down state by state, personally, I think politically that will be an absolute nightmare for him, because over in the UK, everybody now hates Boris Johnson since he locked down everything, even though he was advised by scientists to do so. So I believe the only thing that could keep the United States open on a state-by-state basis will be the fact that Joe Biden doesn't want to make himself hated during this time. Or if Trump is still in charge, if there's still an exchange in power.
I'm not leaving. I'm not leaving.
Not fucking leaving! He would also wish to stay in a good light with citizens. But from a scientific point of view, it seems to me it's not a coincidence that every single scientific committee is advising all their government leaders to lock down countries. I'm not a personal fan of the lockdown, but I don't want to get into politics here. So let's just look at the best trades we can make right now. So firstly, let's add some rationale to this whole situation. Yes, the V-shot has been proved to be 90% effective, but the real question is, how long will this take to be rolled out? Well, estimates put it at around 50 million doses this year and around 1.3 billion doses by next year. However, this must be stated, each person requires 2 doses. So half those numbers, it's 25 million doses this year. And then, of course, there's the anti-vaxxers. There's some people who just don't wish to be vaccinated, and no matter how much testing these V shots have gone, so some people just won't want to have an injection, and that's up to them. That's their freedom and their right. So personally, I'm more on the pessimistic side, and I don't think this is the end of the entire situation. I think maybe by next spring, March, April, this should all start to phase out, and potentially everything should start to open back up. Then that's when I personally may be looking at investing into maybe travel stocks, hotel stocks, etc. But at this moment in time, I still feel we are in that type of economy, that stay-at-home economy, at least for the next few months. And a lot of these stocks which have benefited, even when the economy does open, will continue to benefit because people have adopted these products. People have formed new habits, such as shopping on Amazon and using Zoom when they're working from home. But then at the same time, you do need to be aware that these stocks are at lofty valuations, so those valuations will be hit once everything does reopen. But either way, to help you guys out in your decisions in this video, I'm going to dive into the technical analysis for 2 popular stocks. These are 2 stocks which I am watching, and I'm looking for a good buy point to get in there. These 2 stocks I already own, but the reason I'm analyzing the technicals is I'm probably going to increase my position, at least for the next few months, and then potentially decrease it slightly around March, April, February, or once we know more about this whole situation. So with that being said, here we are, we're inside TradingView. If you guys wish to check this out, this is a platform I use to do technical analysis on stocks. I'll leave a link in the description. You can check it out and see if you fancy trying it out. But basically, as you can see here, I've gone through technical analysis before, so I'll just go through this briefly with you guys, especially you guys who aren't used to seeing charts and it may look confusing for you. I've got a daily candlestick chart set up. So each red and green candlestick is a day's worth of trading. So the green ones are bullish, the red ones are bearish. And I've also got a Fibonacci retracement set up. So this helps us to identify support and resistance zones, which helps us to identify even further buy points. So I've highlighted a few here. So firstly here, I've noticed a potential support here at around $369 on Zoom stock, Zoom video communications. So around $369, buy point 1. So if it breaks through this line here around $400, I believe it could drop to $369. Now that I'm basing that off the previous drop in September. So that's what I'm basing that resistance off, and it's on the Fibonacci retracement. So that's what I'm basing that off. If it breaks through that, I'm looking at a buy point 2. It's around $306. And if it carries on, breaks through that, maybe around $230. Although I can't imagine it going this low unless these V-shots start to be rolled out at scale and people show a need and people show an eagerness to not just want to take these, but also want to return to offices to work and don't wish to work from home as much as they did. Because like I mentioned earlier, people tend to overreact in any situation. So this is all about behavioral psychology. I think with people being forced to work from home, people will love and be really eager to get back in the office. So people will definitely go the other way for maybe the first few months. But then let's say everything is back open, I think people will still like to work from home at least a few days a week, just for comfort, just for ease. Right, second, Amazon. Now Amazon's the big tech giant, e-commerce, Amazon Web Services. I definitely think Amazon won't be as volatile as a stock like Zoom. So even when everything does reopen, I believe people have altered their consumer shopping habits and will continue to shop online. I believe at least 50% of the US population are Prime members. They have Amazon Web Services, the #1 leader in cloud. Amazon is just moving into so many different verticals. They're working on vertical integration. They've got EV delivery vehicles. They're working on drones. I think it's a great stock. It will be less volatile, but I also think less upside compared to a stock like Zoom, only because of its size, and as companies get larger, they find it harder to grow. So Amazon stock, as you can see, it's only down 3% so far. This is from the chart I'm looking at. Probably by the time this video goes out, it'll be down a lot more. So if I go down to the support here, I'd say around $3,000 per share. Could be a good entry point. If you don't have any Amazon shares, this could be a good point. Fractional shares I recommend. I'll leave a link for eToro below. You can purchase fractional shares for Amazon on there, or even trading 212. You get a free share when you sign up. If it breaks through that, around $2,800 is a okay price for Amazon. It's still high valuation. It's that type of stock. But it's not too bad. They look like good entry points to get in if the stock continues to fall. So that was today's video, guys. It was a quick update. I've managed to get this out as soon as that news broke for you guys, just to give you a little bit of information and show you where that wealth has gone. So people have been selling the tech stocks, selling the stay-at-home stocks, and moving into the cyclicals, into the travel, into the hotels, into the cruise lines. Wealth transfer, I feel, is very interesting to watch and interesting to see in the markets. But my theory is the market always overreacts and the crowd always overreacts. So people will probably sell too much of their stay-at-home tech stocks, invest too much in the travels and cyclicals, and that difference is what us as investors can take advantage of. So that's today's video, guys. If you found that valuable, feel free to give it a big thumbs up. I hope that helped you a lot. If you're new around here, hit that subscribe button and turn the notification bell on for more investing tips and stock market picks, which I'm personally investing into, and comment your thoughts below. What do you think will be the implications of this Pfizer announcement? Do you think this is light at the end of the tunnel? Do you think everything will reopen? Or do you think this will not have a major impact in the short term? I'd love to know your thoughts and how you're trading this news. And with that being said, I hope you guys have a fantastic day. And remember, observe the masses, do the opposite, and trade smart. Invest safe.